So are you new to Canada or are you trying to just improve your credit score? So in this video, we're just going to discuss basic ways how you can improve your credit score from zero to a top level. Or if you're a newcomer, you will be building up your credit score right from scratch. This video is for any Canadian or for any American because the principles apply the same in both these countries. So the very first thing, what is a credit score? So if you don't know much about credit scores, basically a credit score is just a way for the creditors, which can be a bank, private lender, employer, or your landlord, to know your credibility. So basically a credit score in both Canada and US varies from 300 to 900. Now obviously anything above 700 is going to be a good score, and less than that is a bad score. If you are in 800 and above, that's like one of the best, excellent score. So in simple ways, if you follow the steps correctly in this video, I can guarantee you how you can build up your credit score from very bottom to the top in case you are in the bottom history. So a credit score, first of all, you should be monitoring your credit score on a regular basis. A credit score is usually given by credit bureaus in the countries like Equifax and TransUnion. So the Equifax and TransUnion basically are the credit bureaus where your credit score is generated out of, because your history of making payments or applying for new products is all reported to them by different banks or institutions. So the best way you can monitor your credit score is through these free applications. If you are a Canadian, I would recommend you using Credit Karma and Borrowell. Both these websites offer free sign up, and you can literally monitor your credit score, and you can check what your current score is. You can check what is the different number of reports you had recently. And this is also a good way to keep your credit score a good check, because in case, say for example, you lost your SIM card and your identity got compromised, then this way you can know in case someone opened something suspicious on your account, and that way you're on top of the game and you can report it to the police right away. Now if you're an American, you can have a similar feature with these applications or websites, or there's another one called Credit Sesame, which offers free service for you to look into your credit score on a daily basis, monthly basis, whatever way you like. It's free to sign up. Now we are going to discuss the various different factors how your credit score is calculated. The credit score is calculated in 5 different factors. So we will go step by step and talk about them one by one. So the very first one is 10% of the factors to determine your credit score, which is the credit inquiries. Now credit inquiries is basically that you are just applying for different products, you're applying for a mortgage, credit card, car loan, any kind of product. And that's when the lender will do a credit inquiry to make sure he can lend that product to you. So that's basically how that 10% of your credit score is from credit inquiries. Now you don't have to worry too much about it, because you will be losing like 2 to 3 points upon one inquiry, but you will regain it back within a month or two. So don't worry too much about it if you apply for different products once in a while. But I mean, it's just basically how it is. You will lose 2-3 points, but you will regain that back in a month or two. So the next factor is 10%, which is the type of credit you use. So that basically is what different kind of products you have from creditors, which can be credit cards, mortgages, line of credits, or your car loan. There's so many different things. So till the time you are making all the payments on time, it should not be a problem, and it does not really matter how many different kind of products you have for credit. Make sure you're paying everything on time. Now the next factor, the third factor, is credit history, which is for 15%. So this one is really important, because this now tells what kind of history you have in regards to lending, like anything from creditors, from bank, any institutions. So in simple words, say for example, you opened a credit card 10 years ago. and there's another credit card which you opened just 1 year ago. Now the 10-year ago credit card is like your longest credit card you ever had, and that builds up basically your whole credit history. So now if you cancel that 10-year credit card now, that will really affect your credit score, because that is the one which was basically giving you a good profile because you were making good payments on it, making timely payments, and it was there with you for 10 years. Now the 1 year credit card, if you cancel that, that won't make much of a difference, and it's okay to do so if you don't need that product. But I would recommend, if you have any older credit cards, I would, on my general scale, it's anything more than 2 years. I don't recommend that you cancel it. If you don't need that particular product of that credit card, I would recommend you can just switch it over to like a no annual fee credit card, and that way you can just probably make one transaction in 1 year, like for a coffee or anything, and keep that card active, because you need to make sure you're keeping the card active and not letting it go inactive, because when the card goes inactive, a lot of banks will just close your account because they think you're not using it, and then again it's simply just like closing your credit card on your own. That will really impact your credit score. So if you have any older products more than 2 years, a credit card or anything, I would recommend keep them there. Just switch it over to a no annual fee credit card. Like a lot of banks, like whether it's in Canada, it's RBC, TD, Scotiabank, they all allow you to do a product switch to any different products in their bank. Or if you're in US, then same thing goes to any Chase banks, Citibank, or Bank of America. They all allow the same product switch thing, which you can switch over to a no annual fee card. Now the fourth factor is the one of the most important factors. It's called credit utilization. Now what does that mean? It basically means, like in simple terms, say for example you have one credit card of a credit limit of $10,000. Now if you are using the credit limit for $9,000 in a month, that basically means you're using 90% of the credit you have, which obviously does not look good if someone is doing a credit check on you to give you a mortgage or anything, because they will think that you're literally using your credit card all the way to the maximum. So the best way to minimize this is like you can have multiple products, and that way, say for example, you have 3 different credit cards worth $10,000 limit each, which makes it $30,000 now. And if you only use 9,000, that is not 90% anymore. Whereas if you just had one credit card and you use 9,000 every month, that shows that you're using it for 90%. So try your best to keep your credit utilization in less than 30%. That way it's always in good books of the banks and the creditors, and you won't ever have a problem applying for any product and getting approved. So if you are just having one credit card, I recommend you having at least few cards, so that way you have more room for credit utilization, and just gives you more opportunity to have more space for you to utilize your credit utilization in a good way. So last but not the least is 35% of your credit score, which is for payment history. Now guys, this is very important. Having a credit card does not mean that you can just go on a shopping spree and don't worry about paying the bills, and I don't know, like if you're thinking about paying 20% or 30% interest rates on a card. I don't recommend that at all. If you are getting a credit card, you should be paying off the bill in full before the due date. That's what your strategy should be, and you will never have a problem. Your credit score will always be on the top end if you are following these steps. So if you get one credit card, 2 cards, 3 cards, mortgages, car loan, make sure you're not missing any payment, because this is one of the most important factor in determining your credit score. So if you get a bill end of the month or before the due date, make sure you're paying it. Don't forget about it. If you are one of the persons who tend to forget about things, set up a auto debit or try to pay it off right away as the bill comes. But try your best that you don't miss any payment, because as soon as you miss a payment, it shows up on your credit bureau that you missed a payment, and these things negatively impact your credit score. So to summarize everything, I will just recap what I told. So first of all, to improve your credit score or build up your credit score, make sure you at least are signed up to any free credit websites. In Canada, it's Borwill or Credit Karma. In US, it's Credit Karma or Credit Sesame. Then you need to make sure the credit inquiries are 10% of your credit score. So you're making sure that you're not applying for too many products at the same time. Always keep a gap of few months in between, and that way when you lose points when you apply for any new product, you regain it back in a month or two. The next one is types of credit you have. So if you are having various different credit products, it's totally okay. I have multiple lines of credit, credit cards, mortgages. It's totally okay till the time you know what you have and you're making timely payments to them. The third one is your credit history. So as I told earlier, any older product you have which is more than 2 years ago, try not to cancel them, because those affect negatively on your account, especially when they're very old products like 8 years, 10 years. So if you have a credit card which charges you an annual fee and you don't really need it, see if your bank has an option of a product switch to a no annual fee card. That way you don't lose the history of that product, but you still have that credit history with you, and the product you never had to cancel. You just have a no annual fee card, and you're just basically going to make one transaction in 1 year just to keep it active. Fourth one was credit utilization, which is 30% of your credit score. Again, I told you it's a very important factor to determine your credit score. So in this, you need to make sure that your credit utilization and your credit spending every month kind of, there is a match to it. So if you are someone who has one credit card of $10,000 limit, but you tend to spend $9,000 every month, I recommend you to have multiple credit cards, because that way you will decrease your credit utilization. Because if you just had one credit card and you're spending $9,000 out of the 10,000 limit, that's 90% of credit utilization, which is a lot for any credit banks, anyone to give you a loan, which they will never give. So try your best to have multiple lines of credit options, so that way your credit limit is a lot and you're just going to use a small chunk of it, which is hopefully less than 30%. So last but not the least is the payment history, which compromises of 35% of your credit score. So you need to make sure you're making your timely payments for your credit cards, line of credits, mortgages, car loans, anything. You're making sure you're paying it off in full every month. Do not leave a credit card pending with a minimum amount, because you will be charged a hefty 20 to 30% fees depending on your credit product. So make sure you're paying it in full every month, else don't get a credit card if you cannot utilize the credit product wisely. Now, if you like this video, guys, just support me by liking this video, so sharing it with your friends or family who are improving their credit score or trying to build it up from scratch. Just share it with them, and just hit that like button if you like the video, because this is the kind of videos I will be sharing more and more, so more newcomers and more people with bad history can build up their wealth and credit in Canada or US. See you guys.